time zone on top. How do you get this time zone on my window? If you are using the conventional Autochartist program, you should just be able to see a time zone box. And you can see there's a drop menu, and you select whatever time zone you're in. All right. If you don't have it, then you have to call technical support, and they can straighten it out for you. You have research on the right of your chart, and you only have product support. Again, it just depends on what kind of package you've signed up for and what kind of deal you have. So those are questions that are more suited for technical support and not this webinar. So I'll just point that out. If you have questions related to patterns and how to use the patterns and Fibonacci patterns as well as key levels and such, you can ask those. As far as technical support, you'll just have to put them in an email and send them in. All right, so what main thing I wanted to point out is on this particular chart is that you look at initial trend and you look at breakout. Those represent things that are happening before and after the pattern. The uniformity and the clarity are about things that happen inside the pattern. Okay, I put more weight on the initial trend and I put more weight on the breakout. Okay, I'm not too keen on what's really happening inside here. I can read the action, okay, but of course I'd like to see high uniformity and clarity ratings, because that may mean something subtle is going on there that I can't pick up. But what I really want focusing on is what kind of trading action occurred before the pattern was formed and what's happening afterwards. And if I'm watching what's happening afterwards on these breakouts, I definitely want to know what the momentum of a particular stock is. I want to know what the volume of the stock is or the equity, so I can figure out if there's momentum or some volatility behind the move. Because ultimately on any breakout method that you use, whether it's a Gann swing chart, a trend line breakout, any kind of breakout, you need volatility. It's amazing how good we become as traders when there's volatility. Volatility is a friend and a foe. If you trade too large of a position, volatility will kill you. Okay? If you work with volatility, it'll be your best friend, because it's going to help you help a market move, and it's going to help you achieve more success. And always remember how volatility moves. It tightens up and gets very narrow like a clenched fist, and then it expands. So you can imagine that when volatility is increasing because of a move like this, and then it rotates and it goes into a sideways move. If you are a breakout trader and that's your style and that's what you're comfortable with and that's what you want to do, okay, then you want to wait for volatility to compress. Okay, you want to see low volatility. You want to see chart patterns that suggest low volatility, because you are waiting for the breakout. Okay, all right. That's why you should always pay attention to what the chart pattern is and what the volatility is at the time of the time you want to trade it. Okay. Also, when you're working with charts or with equities, you want to know a little bit about how the stock moves or how the equity CFD moves. That involves some research ahead of time. All right, you want to know what the average range is per day, and you want to know what the average volume is per day. Number one, you want to make sure you have movement. If you don't do the research ahead of time and know how much it moves per day, then you may be trying to force the market to do something it doesn't want to do, or you could be trading a stock that hardly moves and you're getting stuck a lot of times because it's not breaking out. In cases like that, it means that you have to usually wait around for news to happen. In the meantime, you could be spinning your wheels doing that when you could be trading a stock that moves. So find a stock that moves. You're going to see when you do searches on lists of stocks that some are going to move quite a bit in one day, and others are going to move small. You want to find that core in the center that gives you a reasonable amount of opportunities every day. And like, for example, if I'm trading U.S. stocks, I don't want to really touch anything that doesn't move at least $1 per day. Okay? I also look at volume, and I want to look at average volume, and I don't want to trade anything that has maybe less than 1 million shares per day. Those are parameters I look for. So once you have those parameters down, then you get a list of those stocks. You can go to Autochartist, and you can find it. You can type in these symbols. Okay, so for example, if I wanted to look at Microsoft, for example, I can put in the symbol for Microsoft, and I can add it. All right, I can add it in there, Microsoft intraday. But I can also change this to, I can name this high volume and high range. Okay, so I can create that search. It's going to come up here as high volume, high range, and then all the stocks that I list in there, I'm going to know fit the criteria that I like. You know, $1 per day or high volume. So those are types of things you can do with Autochartist. You can create outside lists, bring them into the portfolio, and in this case, since I only picked Microsoft, you can see that it just gives me all Microsoft particular stocks. So you can build it if you want to, any way you want to. If you have a list of favorite analysts, maybe puts it out in a newsletter, you can put those lists in there too. So there's a lot of opportunities. All right, question came in. What kind of time frame candlestick do you look for in equities? I actually look for all kinds of time frames. I can't really say, but I can tell you my approach. I do what I call a top-down approach, okay, depending on what I want to do. If I'm buying something for a daily move, for maybe a portfolio, I'll look at monthly first for the trend. I'll look at weekly to see if I have the same trend, and then I'll try to trade the daily in the same direction. Now for my intraday, if the daily trend is up and the hourly trend is up, then I want to make sure that my 15-minute or my 30-minute I'm looking for up moves. I always want to know what the trend is, and I want to know whether I'm trading with the trend or I'm trading against the trend. Okay? When I'm trading with the trend, I always try to look for bigger moves. Okay? And when I'm trading against the trend, I want to look for quick target type moves. Okay? That's just my style, because when I'm going against the trend, I feel that the market is all eyes are on me, and that if this trade doesn't work, I don't want to get crushed. So what I do is just try to get quick moves that give me high risk-reward ratios. All right. Let's see. Another question is, I trade equities, however, I do not trade stock that average less than 1 million shares per day. Yes. You can go through Autochartist on volume, and you can select anywhere from a rating of 0 to 10, but you can select specific volume. That may be an add-on feature later. If you write in and ask a question or write it in the commentary, you may be able to to get a response later or change it. So that's one thing. Because that gentleman asked if he could switch that. And you're looking at completed patterns or emerging patterns to trade more successfully. Well, again, that depends on your trading style. Let's move along to an index here, on chart patterns. See what the E-mini Dow is doing. Okay. Again, here's that triangle pattern. You can see that it compressed and went sideways, and then you got that breakout, and it kind of hit that target zone almost precisely. I didn't prearrange any of these stocks, so whatever comes up, comes up. I can deal with the fact that it's trading and you're going to have wins and losses. And the idea is to use the stop and keep your losses small. Losses are going to happen, but they don't make you a loser. Always remember that. It's the cost of doing business if you're trying to treat this as a business or as a professional trader. Losses happen. Keep that in mind. Big losses are unforgiving. Big moves just happen. They can't be planned. Okay? Big moves just happened. All right, so in this particular case, if you look at it, you'll see that we had a pennant formation which falls into the non-trending pattern again. And as I said before, you have the big range, and then you have this sideways action that triggers this compression. And this compression, this is almost a perfect apex here. See, when it's inside this point here, there's nowhere for the market to go. So it has to make its move. So what it's really doing is it's pinpointing volatility for you. It's telling you something's going to happen. It doesn't tell you where, so you have to be nimble and you have to go the way of the move. Now, sometimes you're going to get faked out, but if you look at the odds of how many times the market goes up through a point like this and then back down through it, well, the odds are really in your favor to go the way of the move. Okay? If it's a popular stock, traders are getting antsy because they see all this taking place. All right? So the S&P, for example, that's a very popular CFD and also popular futures contract. So it's unlikely that there's going to be a big enough trader in here to reverse the market. Okay, now it may happen during your report, but that's not a trader manipulation. And when I say manipulation, I don't mean it in a bad way. What I mean is that when you have an unemployment report, for example, you have two numbers. You have the unemployment, the actual hard number, what were the changes in jobs, okay? And you also have the second number, what's the percent, the unemployment rate. So you can have both numbers turn out bullish and the market will go in one direction. But it is possible to have one number bullish and the next number bearish. That's why we have the guesses ahead of time. So whenever you watch a market and you have two types of numbers, whether it's if you're doing the U.S. Federal Reserve, you're going to have a statement on interest rates, and then you're going to have a policy statement. When you listen to the ECB, you have a statement on interest rates, you have a statement on policy. So that's why you can get two-sided markets on central bank reports. When you have non-farm payrolls or employment reports in whether it's the UK and the Eurozone, in the US, Germany, whatever, you're going to get a change in the jobs and you're going to get a percentage of unemployed. So when that happens, you can get two-sided markets. But under normal conditions, you're not going to get it. Once a market makes its move, you want to make sure that you start to see a difference here, how these are all tight. You can see that when you're alternating between red and green, that's uncertainty and that's indecision. Okay, that means the market's waiting for something, and then typically you start to get consecutive moves like green. Okay, so that's a good indication of what's going on. Now, remember too that even though it didn't hit the target, okay, you have to watch these patterns and you have to trail stops. If you start to see that the market's making higher highs and higher lows, then a good rule of thumb is that you just trail your stop below the previous low. Okay? Again, these are quick moves. These are short time periods. Okay, you don't have to get too elaborate with them because Autochartist puts out so many recommendations that if you miss a move or you kind of trail the wrong time, that these markets are like buses that just keep coming along. The main thing is you don't want to hold on to something that falls back below where you got in. Once you start to get the momentum move, you stay with it until the momentum shifts. Good rule of thumb is if you don't hit the target when the color changes from green to red, for example, that should serve as your warning that buyers have stopped coming in. Okay? You're not going to be big enough. I don't know anybody out there, and I know myself. I am not big enough to move a market. So when I start to see somebody else put in red candlesticks in, I immediately start to watch the cookies that I have in the market, because I don't want anybody taking what I have. And I know that I can't stop the market, but somebody else can. So that's just a good rule of thumb to use, is when you see the color shift, think about getting out. Let's see, question here is, look at completed patterns or emerging. Well, you know what? It depends on the type of trader that you are. If you like to get a lead, let's look at an emerging pattern here in the S&P, for example. All right, as soon as you get the signal, this bar here represents the time that Autochartist identified that this was going to be an emerging pattern. Okay, just a little clue is after, it's usually for any kind of trading, whether it's a GAN, like a swing chart. Swing charts would say this is a low, but when I have two higher highs, then this is a bottom. Remember, there's a low and under bottoms. Okay, so sometimes you have to wait a one bar up, one complete higher high, higher low. Yeah, then maybe you can say that's a minor bottom. If it goes two, it's a main bottom. If you wait for three, of course, now you're starting to pull away. But you could see that the market is gonna charge you at different times. It's not a free game. So what happens is when it's up just one bar, the dollar risk is small, right? But as far as being accurate, yeah, you might get stopped out. Now, when it gives you two signs, and you're trading a breakout, for example, or a rally, now the risk from here to here is even greater. So the more of the story that the market reveals, the more it's going to cost you. But also a two-bar rally is safer than, say, a one-bar, because you're pulling away from this exit point, or this is the point where the pattern fails. So remember, there's always a trade-off in the market. As the story is revealed, the market's going to charge you more. Okay, so if you can put up with a series of small losses, then trade aggressively the first time you see that turn in the market. Okay, if you're more of a longer term guy and you want to try to buy something and hang on to it for a while, then wait for more of the story to be developed. So the same thing goes with the top. When you start to see one or two bars sideways, this is a swing from here to here. From here to here is a swing. From this top to from this bottom to this top's a swing. So the swings are basically like a zigzag pattern. Okay. Now after this top is made here, Autochartist went 1, 2, 3 bars, and then it said, okay, that's a good top. And now I see that a flag is formed. Okay. Again, a flag is a member of the channel family. So there's some distance between these points. They don't narrow like a triangle does, where eventually there's an apex. So if you wanted to, best thing to do is, somebody said, what's the best pattern? Emerging or completed? Well, it depends on your type of trader. If you are a trader that likes, I'm going to turn off my sound here, it's killing me. If you are a trader that likes to sell highs and buy lows in the assumption that the market's going to stay inside this, that's what these yellow lines are, okay, then what you're going to do is you're going to trade aggressively for emerging patterns. Okay, if you're the type of trader that says, I like to trade breakouts, then what you may want to see is your assumption is that Autochartist is saying this market could go down. You see this gray arrow here? So I'll get in as early as possible and I'll play for that breakout. Okay, so you're ahead of the guys who are trading the breakout. All right, so in this case, you can get short early and you can put a stop up above this point, for example, and you can play for the breakout. All right, the breakout, the pure breakout trader says, all right, this chart is on here. If it gets to here, I'll sell a breakout to the downside. That kind of guy isn't going